I think this goes to another issue, Emily, that you've raised with us, and that is, what are the biggest hurdles that the seller faces? Because this is really heart and soul of that issue. Probably number one is that they're unprepared. Okay, so preparation is critical. Number two is, do they have enough of a strong management team, especially for that financial buyer, like a private equity firm that Eric's talking about, that can carry on the operations in the absence of the owner or the key people? That's what the buyers are looking for. Do they have depth in their management, in their middle management? Okay. I'll give you a quick story. A few years ago, we were selling a company, and a very strong company, nice EBITDA, but they were a mess in terms of who made decisions. And it was a kind of an autocratic owner, and he made most of the decisions. And he actually had a couple of his sons working in the business. So we sat down with him. We said, look, you need to create departments. You need to assign your sons and a couple other people to head up these departments. You need to work up the duties of what these people should be doing, call it doing, right? And we put this whole thing together as part of the management presentations when we had the final buyers come in and talk to this company. And they looked like they were, the org chart and the way they described their duties, they looked like they were so organized that controlling autocratic owner could walk away tomorrow and the company wouldn't miss a beat. But we had to do a lot of planning and a lot of work internally, so that management team is critical to the value. Okay.
I think it's important for people to hear that, because everyone building a business it's usually an owner operator in the very beginning. You're the trash man, and you're the salesperson and the star quarterback, as well as the coach. And it's difficult for emotionally to think about yourself not being in that business. You might think you want to sell it. You might think, I want to sell this business. But then when it really, the rubber hits the road, what it means is you have to imagine a world where you're not a part of it and build away from you being essential. And it takes a lot of strategy. It usually takes an outside eye, because an entrepreneur had to be so forceful to make this business succeed that imagine a world where they're not essential to it is I've seen it be difficult for some of my consulting clients. So it's smart to get an outside eye to help you strategize how to do that. So you're not also favoring yes men, people who just say yes. You want people who can lead the business when you're not there, so that it's an asset and can be sold for its greatest value.
Yep, exactly. I mean, the other thing, Eric mentioned customer concentration. We took on a company a few years ago. Their sole purpose, they did nearly $100 million in revenues. And their business model was that they found professional aerospace engineers. They did a certain amount of training, and then they moved those people into the aerospace companies as subcontractors. Okay. They did really well. And when we got down to a couple of the buyers, we started looking at where their revenues were coming from. And they were separate divisions. But when we added up all of the separate divisions of this one company, 87% of their volume was with Boeing, even though they had a lot of independent operations in Boeing that hired them. So they were hired all over the country, but until the question was asked in a different way, we didn't add up all those Boeing contracts. And to tell you the truth, we were not able to sell that company. And then Boeing this was before Boeing had the airplane problems. So the combination of that and Boeing not being the greatest company in the world at that point, that company never sold. And sometimes that happens. Yeah, sometimes it happens. Yeah.
And so customer concentration by definition is when you have too much of your revenue is coming from
in too few customers, right?
Customers, right?
Exactly. Okay. Yeah. It's another critical aspect of it.
Interesting.
The other thing is that you got to make sure that your financial records, your accounting records, your tax information ties out. Okay. We've seen situations where we walked in and the books are a mess. and Eric was talking about this before, to have really good systems and procedures in place. But I think, Emily, that's kind of that's an area where we could bring you in, because you're great at process and at branding. So we need to think about you as well as you're thinking about us.
Yes, I appreciate you saying that. Yeah, for everyone watching, I do consulting, and everyone knows I'm very passionate about, the power of a sales process, for example, standard operating procedures for your sales process, so that you're clear on where you're generating leads from, how you're closing those leads, the type of offers that you're making, so that it's not just, one of your salespeople or the owner making up a different sales scope every time. It needs to be something that belongs in a bucket, so an outside person can repeat the sales process. Or with your brand, making sure there's a brand identity guide, that if you sell this business, you have clear guidelines for how to use your brand, your logos, your fonts, to repeat that on every different asset. And things like this, which seem very trivial, they seem like maybe a waste of time or investment. What's great about it is it turns, if you write things down, you have your profit and loss statement, your balance sheet, your standard operating procedures, your job descriptions, your brand assets, everything's clean and beautiful in a portfolio. Think about the confidence that you can create as a feeling for the person who's evaluating your company. They would look at the numbers and also be able to quickly evaluate, could I continue to make profit if I paid for this business? And you're going to create a feeling of confidence, a feeling, an impression that this business is well thought out, and you will allow them to imagine themselves purchasing it. And sometimes sales is about numbers. That's the place we start. It's in the mind. But sometimes the highest value is about emotion. It truly is, because you have to convince a person that this is a worthwhile investment, that it's on its way up. I'm not just buying something that is worth X today and is going to be worth less tomorrow. They have to imagine a future and feel excited and passionate about it to pay a little bit more. And Eric gave a really funny example one time. We were out to dinner in Beverly Hills, and he was explaining that just a strategy that they had used to position a company. And just by sending a certain email and explaining the business in a certain way, they were able to get hundreds of thousands of dollars more for their client because of the strategy that Eric had implemented. And it wasn't because the company was worth more on paper. It's because there was a feeling that he generated by the email that was sent. And
Emily, that's a really, really good point, because today, buyers will do what they call a quality of earnings analysis. And this is another important thing. And as long as they see that the numbers tie together and they can track the revenues, they can track the profitability, you're 100% correct. If that's in focus and clean, then the buy is an emotional buy, right? It's that emotional attachment to the seller, because now I know that the issues are not there. They're clean. This company is strong.
Yes. And the organization of the process, I've helped a company sell before. And when we did that, we created a portfolio book that had all of these assets, so that you could kind of flip through it and quickly evaluate, oh, they've got their brand in place. They have their org chart in place. So these things, if you can just hold it in your hand, it's simple. If it's dumbed down so that it's simple and clear, the value, you're going to get a lot more